Alrighty, what's up guys? Welcome back to the channel. Today is Wednesday the 18th of January, and tonight we're going to do a bit of a midweek update, and we're going to talk about pattern recognition. Right? I'm a big advocate for, really putting in the time to study the charts. Really trying to get to know your go-to setups like the back of your hand. And a big part of that is the pattern recognition across multiple time frames. So a quick look here at the Mama Market. And we got a pretty good flush here today. So the S&P is down a cool 1.5% here today. Alright, so next few days here, guys, I think we got one of two outcomes. Outcome A is we're pulling back here to the 21 EMA, and we just continue to keep on pulling back. Alright, we got the short squeeze, bulls make a little bit of progress, we get our first good dip, and things pretty much crap the bed. That's one potential outcome. The other potential outcome is that we actually find some support here near that 21 EMA, and then eventually see the market turn the corner and trade back towards the upside. So as far as pattern recognition, what I want to do here is actually study, an example of each of those moves. Study an example of a time where the market pulled back to the 21 EMA and totally fell apart, and then study a recent example of a dip to the 21 EMA that actually saw the market almost immediately trade right back towards the upside. So let's say we're thinking a bit bullish, right? For the sake of conversation, we're looking to buy the dip. Now, of course, one of my favorite trades is getting long near that daily 21 EMA. A lot of my bullish trades are exactly that. Getting long near that daily 21. So a few recent examples here. We got long Meta. That worked out well. We had a trade in Boeing. That worked out well. We had a trade in Nvidia, which we took profits in yesterday. That worked out well. We had a short, right? So we'll get short near that daily 21. We had a short in Microsoft. That was pretty sweet. We had a short in LMT. Also pretty sweet. So the point being, I like putting on my trades near that daily 21 EMA. But obviously, it ain't that simple. There's days where I wish it was. I wish we could wake up and, blindly buy every dip into the 21 EMA and live happily ever after. But as we know, that ain't the case. So what it comes down to really is the lower time frames. If we're going to rally off of a 21 EMA, the trend, the structure, the momentum on a 5-minute chart, a 15-minute chart, a 30-minute chart, an hourly chart, everything taking place on those lower time frames really, really matters. So a good example here recently, guys, would be, let me grab my drawing tool. Alright, look at that bad boy. So check this out. You got the initial short squeeze, right? So you got your first thrust to the upside. Then we dipped to the 21 EMA. And pretty, quickly after, we're rallying right back to the upside. But again, it's not as simple as we're pulling back to a special moving average. So take a look at this. Right? Before, during, and after that big rally off of that 21 EMA, what we want to study here tonight is what's going on in the lower time frames. Because a daily chart is pretty straightforward. You're trading above a big moving average. What's going on under the surface to actually trigger that explosive move higher? So we'll blow the bad boy up here. Alright, what about the hourly chart? Well, sure enough, the hourly chart is bullish. Right, before and during that big push off of that daily 21 EMA, you have buy signals here on the hourly chart. Alright, well, what about the 30-minute? Sure enough, throughout the duration of, most of that push, the 30-minute chart had a buy signal. The 15-minute chart had a bunch of buy signals, and so did your 5-minute, your 3-minute. The point being, you pop open the hood, you look at your lower time frames on top of that daily 21 EMA, they were all bullish. Big 3 indicator pumping out that buy signal on a 1 hour, a 30-minute, a 15, a 5-minute. Under the surface, the bulls had some ammunition. Right? Trend structure momentum under the surface on top of your 21 EMA was as bullish as possible. And that's what triggers that big push off of that moving average. So check out Nvidia. Right? Last week, we're getting long Nvidia right on top of that daily 21 EMA. And sure enough, you take a quick peek at an hourly chart, we had a bunch of buy signals. 30-minute chart, bullish on the indicator, 15-minute chart. Even the little old 15-minute chart went bullish. Right, so that's the key, guys. That's the pattern you want to get really familiar with. It's not as simple as we pull back to a daily moving average. It's what's going on under the surface. 5-minute, a 15-minute, a 30-minute, are they bullish? Are they locked and loaded and ready to rip higher? Or are they bearish? A couple more examples here. Boeing. Right, we got long Boeing right in that daily squeeze, right near that daily 21 EMA. And the hourly chart was bullish. We got our buy signal. The 30-minute chart. The 30-minute chart had the buy signal on the big 3 indicator. The 15-minute chart, of course, same thing. All kinds of pretty buy signals. Okay, what about Meta? Take her to lunch. I never met her. Facebook. Long on top of the daily 21. But it's the 1 hour buy signal. It's the 30-minute buy signal. All right, it's all these buy signals on the lower time frames that actually trigger that push off of that daily 21 EMA. So with that being said, as we take a look back at the market here, going back to about a week ago, we dipped to the 21, and a few days later, you're ripping right back towards the upside. Sure enough, your hourly chart printed the buy signal. Hourly chart goes bullish. 30-minute chart. You had a bunch of buy signals. 15-minute chart, 5-minute chart, 3-minute chart. Y'all get the drill, right? Not enough to pull back to a daily moving average to justify looking for a bullish trade. However, if on top of your daily moving average, on top of that launching pad, from the ground up, from a 5-minute, a 15-minute, a 30-minute, a 1 hour, if you got a bunch of buy signals on the big 3 indicator, well then you actually got a pretty good chance at seeing that big push to the upside. So that brings us to the market at today's close. Right? We are pulling back to the 21. However, if we give the market a quick x-ray here, we're not quite seeing the signs just yet that the bulls are going to rip this right back to the upside. Right? We know what it looked like back here. We're bullish on the 1 hour, the 30, the 15, the 5, etc. Well, what about right now? All right, we'll mark up our key level. We're looking for potential bounce off of that 21 EMA. Well, how's the 1 hour chart look? It's bearish. Now we have a sell signal on the indicator. What about the 30-minute chart? It's bearish. How about the 15? Bearish. Okay, 5-minute. Bearish. Under the surface, nothing is shaping up right now for a huge push to the upside off of that daily 21 EMA. If anything, guys, you look at the example you have back here, we pop, we pull back to the 21, and we keep on pulling back. Well, guess what happened back there? You never got any buy signals. Instead, you got a bunch of sell signals that just drag the market lower. The 1 hour chart went from bullish to neutral to bearish, kind of like we did today. The 30-minute chart went from bullish to bearish, kind of like it did here today. So the point being, it's not enough to mark up a big moving average and get long every time we pull back to it. Right? Play that probabilities game, and you can really put the odds of catching that move in your favor by doing that pattern recognition. Right? If you're a fan of trading moves off of a daily 21 EMA, go study what that actually looks like before, during, and after that move across a bunch of different time frames. Then it makes it pretty simple for a day like today to look at the S&Ps, mark up your key level, but then come to the realization we ain't packing the punch here that's required to actually get that bullish trade to work. If anything, it's leaning a little bit in the opposite direction. So my game plan here for tomorrow and Friday is pretty simple. See if we hold support. See if they can keep price action above that daily 21 EMA. But then I got to get some fresh buy signals, right? Got to get some freshies here before we jump in and get long. So that's what would trigger the bullish trade. Price action stays above that 21 EMA. The 5-minute chart goes bullish. 15 goes bullish, the 30-minute goes bullish, etc. At that point, it's all shaping up here for another rally off of that moving average. In the absence of those buy signals, the odds actually kind of suggest we might just keep on flushing lower here. So a shorter video tonight, guys, but I am a big advocate for putting in the work, studying the charts, and getting really familiar with the kind of setups that you like to trade. And I think one of the best ways you can do that is looking at these things through a multi-time frame point of view. So best of luck tomorrow. If you haven't already, go on ahead and hit the like and subscribe button, and I shall keep you posted. All right, we dump or we bounce. Nothing in between. Have a great night, guys. Talk to you soon.